Berkshire Hathaway's latest deal with Graham Holdings shows the extent of Buffett's tax knowledge, avoiding capital gains taxes on $1 billion by swapping shares for assets owned by Graham. The billionaire took advantage of tax law to reduce the IRS's stake, despite a public stance that corporations should pay their share of the taxes. Betty Liu is in San Francisco for the show today. And, you know, Betty, I just got to say, I mean, at what point does he put his money where his mouth is? He's out there saying, you know, this is not good. He's benefited certainly from carried interest and that special tax rate, and he's complained about it. So why not just pay up more tax?
I agree, you know, and Trish, I don't know if you remember, but years ago, you know, we asked that question to Buffett. We said, look, if you don't like the tax law, you don't feel like you're paying enough taxes, then why don't you just give more of your money to the government? And he said, look, that's not the way it works. Well, the way it works is that we have to actually change the existing law so that everybody plays by the same rules. But we wouldn't be talking about this story, Trish, if it wasn't for the fact that, yes, he himself pays a lower tax rate. He has said that to himself. He takes advantage of exactly the same laws you were talking about, and that works in this instance as well, where he swapped his holdings in Graham Holdings for essentially a third of Berkshire shares that they held, also an existing business that they have, which is the Miami television station, and he also got a little bit of cash for it. Altogether, he pays less tax in that transaction than if he were to just sell those shares in the open market. He would have paid about 35%.
Pretty incredible.
And it is.
But, you know, it's legal. It's legal, and the tax law exists in such a way that makes it beneficial for him, both on the individual level and, of course, on the corporate level for shareholders in terms of them being able to benefit. It's all perfectly fine. So it gets to the issue, really, and one that he's talked at length about, is, you know, what are we doing in terms of our corporate taxation structure? In that, you know, companies and individuals are benefiting so extremely. Should that change?
Well, he absolutely does. He absolutely thinks that it should change. He thinks that the wealthy should pay a higher tax rate. He says companies who are complaining that corporate tax laws are too high should stop complaining and they should pay more. But remember that he, at the same time, is the CEO of a public company.
I think, from him.
Right, he's a CEO of a public company, and as part of as being a CEO, he has a fiduciary duty to make sure that he runs the company as efficiently and as beneficial to shareholders as possible. So if those tax laws exist, Trish, he's going to take advantage of them, which is why you see a deal like this. It's not the first time he's structured a deal in this way. He's done it with ConocoPhillips and their stake in Phillips 66. He did it with White Mountain Insurance Company. So it's perfectly legal, and it is certainly advantageous to Berkshire Hathaway.
Yeah.